Good afternoon. All right. So, January 13th, market is back open. Can you hear me now, Grayson? Let me get a yes, I can hear you. Cool. All right. So a couple things we'll do. We got about 25, 30 minutes. So we're going to take a look first at why we held at certain levels. I know metals are a big thing right now, so we'll focus on silver. And then we'll move over to NQ, which is continuing to range on the larger time frame. So we'll focus here on silver first. And I had a really good trade earlier today at this 89 level because I had multi-confluence here from a fib perspective. And so I think it was this move here to this move here. So we had a extension level. Again, whenever you're drawing your trends to that break, and then you're looking for your fib pullback, your retracement levels, you want to draw it from the most recent breakaway where the trend started. So for example, here we have this breakout, and then from a retracement perspective, where did I have this earlier today? Hold on one sec. I had two different areas that lined up perfectly, and I don't remember where I put them. Let me put my glasses on. And I feel like it was on a larger time frame. And I'm wondering if it was this time frame. Yeah, it was this. Okay. So this was the first one. So you see how we have this first trend up here, and then we had our first pullback. You notice that on our first pullback, we held the 38% level. So since we held the 38% level, then we drew our extension. The extension lined up perfectly with where we came here at this 89.90, 89.815 area. And then I also find a shorter term extension that also lined up with that level. So I was on the 5-minute chart, and I'm pretty sure it was it this move? Let's see. But it lined up perfectly with these areas right here, and it gave us this top basically. I'll find them later. I think I had it recorded from earlier from this morning, but so we had two fib levels that lined up perfectly with this area right here, 89.195. And then we had some divergence as we moved into this area. This is the 5-minute chart. So as you can see here, we had our first move up. We had our secondary move up with significant divergence. And then our third move up into that same level had an even stronger divergence, which made this a really good short area right here. So this was a good trade. And then you see right here, this was a very textbook bounce. And the reason why you see these textbook bounces, which is the retest of this breakout trend, is because we don't have a lot to go off of when we're in price discovery. Once the market is in price discovery, you really just have to focus on key levels to trade off of, which is the most important piece. And then this area right here was the first retest. I think earlier in the day I shared that we still needed to retest the 86 area. I think I put it earlier. We have a breakaway. Yeah, I put it right here. At 5:41 a.m. I said we have a breakaway that hasn't been retested yet at 86. So that was we knew that at 5 a.m. like right here. So we knew at some point we were going to come back and retest this. We just didn't know when. We had our separation here, we had our pullback, and now we held this level for the first time. So the question now is what could happen? Can we extend back up here and break? Absolutely, 100%. As you can see here, we had a trend break right here. So this was our first trend break from the move down. Let's take a look at the 1 minute, see if we've retested that trend yet. I don't see that we've retested it yet. So it's right here. Actually, we did. Yeah, we retested it right here. So the longs look good here, just to be completely honest. The longs look good here. I may even take a long here. As you can see, we're peaking on RSI. There's no divergence here on these moves up. The key levels we have here on the upside that we've created here, we have right here. This area right here, which we've already broken over. We have this area right here that we're holding right now. And then other than that, the only other area I'm seeing is this one right here. This 88.53 level. So if we break over this 87.4, the bias becomes bullish. So I'd be long over this area right here. It's very possible we come back down, we retest this area right here, and then move back up. So we want to see what happens right in this area. And then as you can see down here, we had some nice divergence going to this area. We had peak 1, sell side peak 1, sell side peak 2, sell side peak 3. Third sell side peak lined up perfectly with our retracement level. And then let's see if it lined up with a retracement level as well too. And also lined up with the 61.8 retracement level. So 3 layers of confluence here on this. This would have been a very good trade to take. We always look for 3 layers of confluence. Additionally, the 4th layer of confluence happens right when we got there. And what happened right when we got there? We had a heavy volume candle that basically engulfed the previous candle that came down. And then that's where our separation started. So participation was valid. Our trend retest was valid. Our Fibonacci area based on this move up was valid right around this 61.8 retracement. If you move it back up right here. And then we had divergence here on this final push down into this area that we were looking for. So 4 layers of confluence here that aligned perfectly with this bounce point right at 85.7. I didn't trade this area, by the way. I was not looking at the market in the afternoon, but this would have been a very, very good trade to take. 100% a good trade to take. Right now, we're looking like we're doing a micro uptrend. So this actually does, I'm telling you guys, this looks like a very good area to take a long position as long as we break and hold over this 87.335. I like it when I see these tight bars to a certain direction like this. Usually what the market does is it does this tight move up. We'll get 1 bar down, and then we'll just have a nice continuation to the upside. Hopefully back to retest this area right here where we had our price gap on the move down, right around this 88.5 to 88.4 area. So that's what we're going to look at to the upside. But that's what you guys want to look at again. So if I could define this for you guys, as how to look at layers in the market. How do you look at layers? The first 3 layers are based off of something that hasn't happened yet. So you're looking for locations. The first 3 layers are looking for locations. Where do I need to look at for things to align? Alignment is important. The next 2 things that you're looking for, once you get to that location and everything aligns to that location, now is going to be participation and momentum shifting. 2 things. So you can use RSI divergence, MACD divergence, whatever type of divergences that you want to use, you can use it. I use RSI. You can use whatever you want. But you want an indicator that shows strength, and you want to see momentum fading as it moves into that level. That's number 4. Number 5 is going to be market participation. Market participation, you can only tell based off volume. When we entered into this key level, wherever we were, was there high volume separation? We had high volume separation here. 5 layers of confluence. That's it. And when you find trades like that, you start realizing that it's easier to wait for a trade to come to you than it is to take a trade that you don't like. Similarly up here, right? When we got to this top, I really want to find where I had the extension at, because it was really nice. Was it here? Was it this extension? It wasn't there. It was one of these swings, and I had 3 different extensions that lined up perfectly with this 89 area, and I was like, 89 is going to be a nice short. And then when I came back and we were moving up into it, I was like, okay, this is the area that I'm looking for. So if you look at the hourly right here, this is where we're going to have our possible resistance. So we are going to see, you see how we're moving up right now? Nice moves to the upside. Remember, I just shared, we usually have these channels like this where we have a slow move up, and then we have momentum that fills in a direction. So now that we're over this area, we can probably see some upside momentum. I'd like to see us break over here and then move into this price zone right here. And so we'll see what happens as we watch this trade. Let's get some upside momentum. RSI is peaking, and I love to see RSI peak. The reason why I love to see RSI peak is because it tells me that we're going to be moving into some sort of structured swinging momentum. So first peak, I look for it, and I look for 2 more peaks after that. So that makes me satisfied with being in the current trade I'm in, because I want to continue to swing and see possible some divergence as we move into this key level right here, which we're a little bit away from. We still have, possible couple legs back up as we move into this area right here. And pullbacks are totally fine. We want to see areas retest and hold. That's the main thing. So we'll see what happens with this trade right here. And then where's the retracement level from this high to this low? We've already broken out of it. It was right here. The 61.8 lines up perfectly with this top. So this is where we want to see if we have some divergences and resistance here as we move up to this 87.85 area or so. That's where we want to look at it. So right now we're pulling back to this area right here, which we want to hold right over 87.450. We will add here. Let's go up. Let's keep moving. Let's get some momentum to the upside. Now that let's create a secondary peak, which is what we want to do within RSI. We want to move into this zone that we've already identified. Right over here, right around 87.835. Let's see momentum. Let's get another peak here. There we go. Get some momentum. I know you want to break this candle, baby. I know you want to break it. I can tell. You don't make moves like this for fun. You do it with purpose. You move. You move with purpose. That's what you do. Let's move. Let's get some momentum, upside momentum here. There we go. A little bit more. A little bit more. $70. Let's get another higher peak. 71. And I watch RSI because I want to continue to see strength. I want strength to increase as I'm in the trade. And this is where we're targeting right here, 87.895, where we have our retracement level. This retracement level aligning perfectly with this level. This is where we want to take profits and where we want to see how price reacts. Set our target for there, 1,470. Right before we get into that zone, see if we can just get a decent momentum candle to break this top, hit that level, and then we'll watch what happens with price as we get closer to this area right here. I don't want you to come back down, baby boy. I want you to stay up. Wake up, wake up, wake up like it's the first of the month. All right, some nice pricing behavior. I like that we're buying up all these red candles as they're coming down. When you start learning candle behavior, you start seeing little things like, red candles down, and then all of a sudden big buys that turn red candles into hammers or continuation candlesticks. We're seeing a lot of those here. That's usually indicative of a continuation into the direction that it's looking for. Now, we are dropping an RSI here, but I do want to see one more peak as up into this level before we exit the trade. All right, let's get some upside momentum here. We got this little pattern forming. Come on, baby. I know you want to squeeze it for me. I know you want to squeeze it for me. Thank you all for being here. I'm grateful. We're on this trade right now. We're looking for a squeeze up into this demand zone where we also have our retracement level, multi-layered confluence. This is where we take trades. This is where we take profits. It's what we do. This is what we do. Now we're just looking for a nice candle to break over this, give us some momentum as we break this top, get to our take profit area. So we're getting a decent amount of sell candles, but RSI is still sustaining right here, which is what I like. I like to see this. We're not getting a big dip here when it comes to sell pressure. We're still holding this area right here, which I like to see when it comes to sell pressure. I don't want to see big sells, I want to see red candles, but with little sells. Here we go. Let's get our momentum bar to the upside. break through that micro trend that we see here, and then move into our profit taking zone, which is also where we're going to look at to see for a possible reversal, if it is there. We're not going to take a trade just because when we get there, but we are going to look for divergences as we peak again. We're going to peak, break out of this, and we're going to peak. There we go. Let's go ahead and peak. Let's clear this out. As we move up, let's break this high now. This is the next level that needs to be broken with momentum and decent volume, and we get a volume spike up to this area right here. Oops. Top is out. Let's go. Let's break it. I'm going to take 3 off here. I'm going to leave the 3 there just because we hit that high. So we already took away about 300 bucks or so. So now we're going to wait for this high to break, hit our profit target. If not, we're going to set a stop just below this candle at break even. So that's one of the things about when you start looking for locations. This is what I call location-based trading. The 5 layers of multi-confluence. Location-based trading is the 5 layers of multi-confluence. You look for areas. Once you identify those areas, then you feel more comfortable trading in the direction towards that area. You're not always looking for a reversal. Sometimes you're trading the continuation. But because you know that you're in between two areas, you're not as worried about taking a trade in the direction because you know that your key level is coming up. Your key location is coming up. Location-based trading. I don't like that this is spending so much time here, so I may move this up to, if we break below this candle, I'm going to close out. I'm going to trail this. I do think that we're going to just have a ripper candle up here, but I'm not going to miss out on 600 bucks just in case. There we go. All right, so $550 trade. We traded the continuation here. We had a break of the trend here. That's it. And this is how I take trades. I look for my key levels. I look for where price is going. I look for candlestick formations that tell me that price is going to move in a certain direction. We scalp in and out of the market unless we're at a key level. If we were at a key level, I would be looking to hold my position for longer when the 5 layers align. Okay, so again, write this down. 5 layers of multi-confluence. What are those 5 layers? And I actually wrote this down. Market direction. Where are the trends? What's the trend? Where am I looking for to take positions? Institutional zones. These are areas of price displacement. These are levels of supply and demand. Value zones. Value zones are based off mathematics. Value zones are places like Fibonacci, retracements, and extensions. These are areas of value that are waited for before big money comes in. Momentum conflict. Where am I getting divergence? Where am I getting divergence? Where is momentum not aligning with price movement? And then finally, it's participation. When I'm at these key levels, is volume indicating in the opposite direction of where I want to trade, or in the direction I want to trade, that this is the area that they're going to defend. Participation. Those are the 5 layers of confluence. And you have to, if you want to learn how to take better trades, you've got to figure out where these things are happening, right? So this is also an added layer of confluence right here, a trend retest. So this could come down as far as, what it would fall under. It would be location based and it would be supply and demand. So a trend retest is basically a supply zone, supply and demand zone, right? Because they're retesting the trend. Align these things, and the more that you have aligning, the more likely it is that you're going to take a good trade. If you only have one thing, then the probability is extremely low. If you have 2 things, probability increases a little bit. But if you have 3 things, now you have a good chance of getting a really good trade. If you have 4 things, your trade, you should be going double the size that you normally do because it's a great trade and you know it's going to be good. 4 things are aligning. If you align all 5 layers of confluence, you should be going full size, confident. You know that this is your place to take the trade. That's the main things. So again, 5 layers of confluence. Start looking at the market basically as data, and once you uncover one piece of data, you're looking for another piece of data. So let's go over to NQ real quick. I got 3 more minutes. NQ looks like it's about to break to the upside. This is a bullish continuation channel. 100%. Let's see here. Probably pull back to this area right here, which will possibly create this channel right there. You see how these 2 wicks line up perfectly with the top 2. So this is the channel I'd be trading right now. This is what I'd be watching. Held this support, separated, and we have a bullish continuation channel. I'll go long here on MQ. I do like this continuation here. Oh, we're already starting to separate, so I may have missed that by just a second. But I do like this trade. Actually, I don't know why I took the trade because I got to leave. But this looks like a really good continuation trade. Possibly moving back up here, up to this 967 area, which is where we have the resistance. Well, let's see if this 967 area aligns with anything else that we have from a supply and demand perspective, from a fib perspective. So let's go to the 5-minute. This area right here, nothing much there. Let's go to the 1-minute. We do have this price consolidation zone. So it's not bad. And then from a fib perspective, if this holds as the bottom of this move, we are looking at the 68 point, the 618 lining up right here in this area. So I'd be looking at this area right here, to 25,970-ish. This would be a resistance that I'd be looking at. But I'm not going to take this trade. I don't even know why I got in it right now. I was just kind of being like, fuck it, let's do it. But we got to stop doing the fuck it, let's do it on stream, okay? No more fuck it, let's do it on stream. We only follow the 5 layers. That's it. That's what we want to do on the stream. Follow the 5 layers. If this move up here is going to be looked at, then we have this area right here that we would want to take a long position at. 38.2. We have a fib retracement level. We have a 38. We have a previous resistance trend support right here. We have price displacement right here. And then so as we move to this area, if we do break down a little bit more, we also have this trend right here. So as we move to this area right here, what I'd be looking for now is what? Now that I've identified potential zones where price is a value, right? We have a previous support, we have a previous resistance trend support, We have a Fibonacci retracement level. We have price displacement. And then we have a micro trend right here that's been holding us support, all aligning with this area right here. When it comes to this area, I'm looking for two things. Looking for momentum conflict, which is momentum divergence. And I'm looking for participation, which is, are we getting decent volume in comparison to the previous candles in this area right here going in the other direction. So that's what I'll be looking for. So that's it for now. I gotta jump. I gotta go to the gym. We'll see what happens. But I'm glad we got to at least take one trade together. Let's see what silver's doing. So silver still holding in this area right here. I'm glad we got out of that trade. But so 400 for the afternoon. We'll come back and then we'll go from there. So if you're not on our Discord, send me a ping. In Discord, we can add you to Corvus, and then otherwise, hopefully you guys enjoy it. And if there's a way that I can explain things better, or slower, or take times on one specific indicator, just tag me and do it, and we'll go through it together. But no taking fuck it trades on stream, okay? We only follow the layered plan, which is 5 layers of confluence. We don't take a trade unless we have at least 3 layers. And once we have layer 4 and layer 5, we know it's time to go in.